What's interesting this year is that you're seeing a lot of the visits are not just for infection, not just about COVID. And obviously, we've had a very slow flu season because so many of us can sort of work from home and shelter in place. But I wonder about that momentum. Last year you saw a lot of new people come in because they had to. They had no other choice in many respects to be able to see a doctor. Notice that your number of fee-only visits actually dropped sequentially from the third quarter to the fourth quarter. Do you expect to see a little bit of a pullback as things open up more, people maybe being less reliant on telehealth?
Second quarter 2021 results came in, and man, there's a lot to unpack on that call. Revenue grew 109% year over year, and that wasn't even the best news. Welcome to MGA Investing. My name is Dee, and yesterday I released a pre-second quarter 2021 preview call highlighting my thoughts going into the call. So if you haven't watched that video, I'd encourage you to go back and watch it right after this video to get my initial assessment going into that call. No one on YouTube provides more single in-depth stock analysis and pertinent news about Teladoc than the MGA Investing channel. Whether you're a newly interested investor and you've just come by, just discovered Teladoc as a stock of interest, or you're a long-time long hauler with the stock, we have something for everyone, and we welcome your comments. Where do I start? There's so much to unpack, as I said earlier, with this video, and I'm just going to hit the really big points right now, and later in the week, I'll come back with a much bigger dig, but I wanted to give you my initial take on today's report and the release of it. Let's start with the revenue. I mentioned in my pre-second quarter 2021 video earlier that Teladoc has beat revenue forecast for the last 2 years, so this is not a big surprise, but $503 million in revenue, representing 109% year-over-year growth. That was a bit of a surprise for me. I think that exceeded most analysts' expectations. To me, the true measure of business growth can be found in visit counts and member growth. This indicates to me the market is adapting to telehealth, eventually becoming the primary first care prior to actual visits and a non-emergency related patient needs. As expected, second quarter 2021 visits topped 3.5 million, 28% higher than the second quarter 2020, which, as you remember, during the first wave of the pandemic. I think this was to be expected, but the access fees revenue was surprising, at least to me. Look at the second quarter 2020. Access fees were $182 million. Second quarter 2021, it was $434 million, a 130% year-over-year increase. And you have to remember, the country had bent the curve as more people were getting vaccinated. In March 2021, reported cases of COVID-19 had begun to drop below 59,000 per day. And as you can see here in this red box representing Teladoc's second quarter 2021 period, and as you can see left of the red box, reported cases have begun to trend back up. That can be a positive impact to Teladoc's third quarter revenues. Take a look at this chart. U.S. access fees revenue for quarter ending June 30th in 2021 was just $434 million versus $182 for the same quarter 2020. That's year-over-year growth of 138%. U.S. revenue went from $211 million to $465 million, a 121% year-over-year quarterly growth. These are the numbers I was really waiting to see. These numbers tell me if large employers see the benefit and are willing to adopt the use of the platform to reduce healthcare costs and deliver more value to its employees. This is very positive indication that they're going in the right direction. When we look at revenue improvement quarter by quarter, it's exactly what I want to see. The second quarter, nearing the tail of the pandemic, had higher access fees than the fourth quarter 2020 and the first quarter 2021. And remember, as I showed you in this chart, the reported cases were going down. Like Netflix, adding new users is an important metric. So is paid members for Teladoc. And you can see that in the second quarter, Teladoc was able to add 500,000 more paid members. Again, more than in the fourth quarter 2020 and the first quarter of 2021. I'll talk more about chronic care enrollments in the next video, but for the sake of time, I want to talk about PMPM. This is per month paid members, essentially monthly subscriptions. As I mentioned in my Teladoc overview video, part 1 of 5, of the 5-part Teladoc comprehensive stock analysis. These are members covered by insurers. It's revenue you can count on over the contractual period. Look at the first quarter 2021 compared to second quarter 2021 jump, a 24-cent per member increase. This indicates that their data systems are working. It's not enough to just keep adding more members. You have to also continue to increase existing member utilization of the system. The higher the utilization, the more that larger employers are willing, or at least looking to reduce health costs, are willing to retain Teladoc services, further driving up the opportunity for future revenues. That 24-cent increase also signifies they're increasing the penetration of their services per member. This further indicates their data science used to reach and engage existing users, it's working. I'll come back and hit visits in the next video, which also exceeded expectations. I'll jump to discuss utilization because I just mentioned it in the previous chart. Remember, I said it was critical that Teladoc increase utilization because if clients, employees aren't using the service, it's highly unlikely they will renew the contracted services. That number jumped to 21.5% in the second quarter of 2021, when most analysts would have thought this would have begun to normalize around the fourth quarter utilization percentage of 18 or so percent. This increased utilization number becomes ammunition for the Teladoc sales reps going out to close more business of these larger employers. In the next more detailed video recap of the second quarter 2021 results call, I'll talk more about fiscal year 2021 revenue and the EBITDA guidance changes and what that means. I'll also talk about the significance of the HCSC new agreement and what that could mean over the course of the next 3 years. So there is much more to talk about because I didn't even talk about the Microsoft collaboration deal. So we'll get to those things as well. Just an parting comment, if you're one of those people that believes Teladoc is just smoke and mirrors masquerading as a technology growth company, this most recent report should get you questioning your doubts. As a side note, I wanted to mention that Kathie Wood remains consistent in her conviction that Teladoc is a major disruptive company in the health services sector, as she continues to add to her positions of Teladoc. Teladoc shares represent over 5.5% of the ARC Innovation ETF holdings, representing over $1.2 billion. Kathie Wood's ARC Innovation ETF now has over 8.5 million shares. Only 2 other stocks that see Teladoc in the ARC Innovation ETF portfolio, and that's Roku as number 2 and Tesla number 1. I'm not saying you should run out and just buy more Teladoc because Kathie is, because her motivations are quite different from the retail investor. The ETF setup has some special considerations for her and ARK investment that don't apply to relieving the retail investor's risk, but that's another video entirely. Investors like Kathie Warren, Bill Ackerman, and others like them who are whales, and they feed in a much different way than the everyday retail investor does. I just find it interesting to watch what she is doing, but my personal investing decisions are based on my portfolio spread and my investment goals and objectives, not following the leader. I found early on in my investing journey that's a recipe for financial disaster. Those folks are having to move big money and they have to move it slowly. If you haven't already, take the opportunity to view the various Teladoc stock analysis on the MGA Investing channel page as you prepare for the release of my upcoming more detailed second quarter 2021 report call full recap. Thanks for watching. If you found value in the information provided in this video, well, hit that like button and please subscribe so you can be the first to catch the detailed recap of Teladoc's second quarter 2021 report call. There's no place on YouTube that you'll get a more in-depth stock analysis of Teladoc. You may not always agree with me, but you can be guaranteed I will give you a lot to think about. We'll see you in the next video.